Welcome to the Castlebridge Capital Market Observations Call for the week of December the 19th. I'm your host, Eric Jefferson, and before we get started here, I have a few quick words from our legal team. With that, we'll go ahead, kick things off, recapping last week. We saw the S&P 500 trade down about 2%, now in the red, 5% in the month of December, down 19% on the year. Headlines last week received a 50 basis point rate hike. That was widely expected. Some interpreted that as a somewhat dovish tone, and that was lower than the 75 basis point rate hikes we've received as of late. However, that enthusiasm was offset as the FOMC published their dot plots. That is a collection of projections from the different members of where they believe rates will be in the future. That hinted that based on current levels, rates would need to move even higher before the Fed could ultimately stop and back off. Additionally, a majority of those members expected rates would need to move even higher than projected levels. That certainly weighed on markets, in addition to Fed Chairman Powell's comments, who emphasized still have a lot of work to do combating inflation, and they would stay the course until it was completed. Interestingly enough, though, at this point, I think it's less about what Fed Chairman Powell says, more about what the data tells us. If you go back a year in time, end of 2021, Powell hinted we may see 100 basis points of rate hikes or 1%. Fast forward 12 months later, here we are at 4.5% higher. Obviously, that was in response to what was not transitory inflation. Kudos for him for obviously making those changes. But again, at this point, I think it's ultimately data that is going to dictate the path forward. Last week, we also got some softer than expected economic data that weighed on markets. We saw retail sales and industrial production came in below expectations. That has stoked some of those slowing growth concerns, which you marry slowing growth and stubbornly high inflation. That is a scenario that Webster Dictionary defines as stagflation. Granted, I don't think anyone is calling for a repeat of the 1970s. And the biggest difference there is inflation is certainly trending in the right direction. As we've talked about, though, it's ultimately the pace of those inflationary declines, as well as the ultimate level that the Fed is comfortable with before they can talk about backing off. And so as we shift the focus going into the new year, I think that the biggest question is going to be what falls faster? Is it inflation or is it growth? If it's the former, then the Fed can back off. That translates to that soft landing scenario. If it's the latter, then I think it's fair to assume we may have some more volatility in store. Turning to the week ahead, do get some inflation data and inflation expectation data on Friday. Otherwise, though, do anticipate a fairly quiet week as folks are out of the office, headed into the holidays here. On a separate note, want to congratulate Argentina for their victory in the World Cup and what was obviously a very thrilling game on Sunday. That's all for this week. As always, have a great week. If we don't connect, have a great holiday as well. We'll talk to you soon. Take care.